Good morning, everyone. How are you all? Just wait a couple of minutes until everyone gets here. Hi, George. Hey, Ashley. Morning, Dan. Morning, Perry. Yeah, the crystal ball's kind of broken today, but it's super interesting. I got up at like 3 this morning. It's 7 now where I am, and yeah, we've done a lot of work here. So I'm looking forward to it. Hey, Gia. Hi, Lillian, Timothy. Evening where you are. All right, we'll just wait until probably another 30 seconds or so until everyone gets here. Um, hey, David. Just noticed I really should have shaved this morning. You can tell my wife is away because I'm looking scruffy. Hi, Robert. Hey, Rick. All right, we're almost 30 seconds past the hour, so let's get it started. So we have 10 days since the ETF announcement. And what we're trying to work out now really is this positive or a negative for crypto prices? And I think we should start with the three major markets, which is Bitcoin, then Ethereum, then altcoins. What we're specifically looking for is money is flowing out of Bitcoin. Is it flowing into Ethereum and altcoins? So this was when the ETF was announced. For 10 days, we've gone down. That was 11 days ago, sorry. We've gone down. And right here, the market's trying to find an equilibrium. And this tiny little candle that you can see here, this is the smallest range in 3 months. And statistically, we know that extremely small range candles tend to be followed by larger moves. Now, the Chicago Mercantile Exchange futures market, which is the institutional market, you can see that their futures open interest dropped dramatically. So this was the ETF announcement, and they just sold out. So all of these institutional traders, or the vast majority of them, were long expecting the ETF to be approved. And once the ETF was approved, they sold right out. Now, the volumes that they traded dropped right down. And on Thursday and Friday, we just saw the first little start of an uptick here. Now, this is the traditional market, so they don't trade on weekends. So this is only up till Friday. And you can see the annualized basis, which is the percentage interest you get paid just for holding Bitcoin futures without taking any directional risk. This had dropped and dropped and dropped from 20%, which is very, very appealing for a risk-free trade, down to 5%. And now it's just starting to rally again. The big deal is we have these existing Bitcoin ETFs, which were the non-spot ETFs. The two of them were called GBTC and BITO. Now, these were very high fees and you couldn't get out of them. And we've replaced them. Well, we're not replaced. We've added to them 11 of these other ones. Now, we get data on how much money is flowing in and how much money is flowing out. We get it a couple of days in arrears. So what as we track this, we can see that we've got $1.6 billion in flows out of GBTC. And we've got we've got $1.8 billion in outflows from the legacy ones, and we've got $2.9 billion in inflows. So we've got about $1 billion in net inflows into Bitcoin from the ETFs. Now, what this means is because we've got a net inflow, the owners of these ETFs will have to go and buy Bitcoin in the open market. Most of this, the vast majority of it, happens through Coinbase. Now, how much is $1 billion over 11 days, spread over 11? 1 billion, we've got $1 billion in positive Bitcoin inflows over 11 days, so about $100 million a day. So in other words, it's positive. It's definitely a positive. Long term, it's definitely supportive. But I think the reality is that this is a little bit underwhelming compared to what some of the crypto moon boys were thinking. Oh, ETFs on, we're all getting rich. It hasn't been what, in the short term, it hasn't been that. Now, let's take a look at Ethereum. You can see immediately that Ethereum is stronger than Bitcoin. Now, this is the way that I'd like you to view Ethereum, and Ethereum is likely to drag altcoins around in it like a dog wagging the tail. We have here the classic buy signal that those of you who trade the crypto salary system will know, triggered on this green line here. So above this green line, we can expect it to go up. Below this green line, we can expect it to go down. That doesn't mean that has to happen. That probably means it flips the odds, like 60-40, 40-60. So again, we have a very, very small candle today, which is understandable because it's Saturday night, right? Now, the thing I want you to notice about Ethereum is that when it's going up, it's gone up like very easily. And when it's gone down, it's fought for every inch. So down, up, down, up, down, up, down, up, down. So what this tells us is that Ethereum is finding it easier to go up than down. The other big thing that I want you to notice is we can see our Chicago Mercantile Exchange futures market, which is the institutional market. This is the one where most of the regulated funds are going to be playing in. Most of them. You can see that we have a steady build-up in Ethereum open interest, and since the ETF announcement, we only have a little bit of a drop. So there has been some institutional selling, but institutions are still much more happy to be exposed to Ethereum compared to Bitcoin, which is why we've currently, in the 100x Coin Club, we've currently got a trade on long Ethereum, short Bitcoin. Now, this is the altcoin market, which we measure in TradingView. You can measure it with total 3 minus USDT minus USDC. Now, what total 3 is the total market cap of altcoins, except for Bitcoin, Ethereum, and BNB. And then we take away USD tethers and we take away USD circles. And then we're left with a proxy of altcoin market cap. You can see that altcoins had pretty much a straight shot up. And then they had a big scary drop. They retested the lows. They tried to go up. And it's been choppy. Down, up, down, up, down, down, up, down, up. It's just been choppy. Now, the way that I'd like you to view altcoins today is as we break in one direction or the other. If we break to the downside here, I think the market's probably going to roll over. And we should have a short bias. We currently have 3 long trades in 100x Coin Club, which we're going to get to. If we break downside, we're going to exit those. If we break to the upside, those long trades are probably going to work pretty well, but we're going to have to pay pretty close attention to the short trades that we've got on. Now, obviously, this is much higher skill trading than we had to do a month ago or 2 months ago. 2 months ago, this was like shooting fish in a barrel. Now we're talking about using some skill. I would prefer, on balance, to shoot fish in a barrel every time. Now, let's zoom into this chart. And it's probably been a couple of hours since I did this. So let's just look at it again. Let's look at it live. Okay. So we finished the closing daily candle here. It's tried to go down, tried to go down. Let's look at it on a 1 hour chart. And you can see that. Let's go back here. Sorry. So these are our lines. You can see that in the last couple of hours, this market has changed from being very choppy, down, up, down, down, up, down, up, down, up, down, up, down, up, down, up. You can see that the character has changed to here. What aren't we seeing? We've got 1, 2, 3, 4, 5, 6, 7 up hours in a row. And we're not seeing what we've seen for the last couple of weeks, which is down, up, down, up, down, up. What this tells us is that the market is trying to make a move above here. Above here, this should be the argument should be starting to be settled. Okay, any questions on this so far? Antonio, you want to just shove your question in the chat? Perry, are those ETFs buying at over-the-counter prices in Coinbase slightly different and lower than regular retail? Very slightly, but only because of size. If we looked at, it's a technical question, but if you went into Coinbase and tried to buy in their order book, if you tried to buy $1 billion worth, you'd have to pay, you'd move the market around. The over-the-counter prices move the market slightly less, but there's an arbitrage between them, so they're kept basically in line. Okay, any other questions so far? And then we'll keep moving. ETH question. Grayscale has an ETH function, ETH fund. That's all that's available for institutions right now. There's a lot of bets that we're going to get after spot Bitcoin ETF. We're going to get spot Ethereum ETF, and if we get a spot Ethereum ETF, then the degenerates are going to look for a spot Sol ETF. So I think Perry's hit the nail on the head here. There's a lot of implicit bet that Ethereum is going to break out because of an Ethereum ETF. Okay, let's move on. Now, altcoin open interest, you can see we exited most of our altcoin positions at around the 26th of December. You can see that we got out just ahead of the drop. There was about a 25% drop in altcoin open interest. And you can see just in the last couple of days, we're starting to see the first little green shoots of an uptick there. Questions above. Marlon, is Sol the clear winner for the next big layer 2 blockchain? No, it's a layer 1, but it's not clear yet. Sol just got a lot of hype in the most recent cycle. It could be Sol, it could be Link. If you've been around in crypto for years, you've seen all of the Ethereum killer arguments. Everyone wants to kill Ethereum. Ethereum's still here. Yeah, so I don't think we can bet on that yet. Now let's look at FinRev positioning. Actually, we have a new rollover since 13 minutes ago. So let's see what FinRev positioning is like in Ethereum. Okay, so what happened today? Ethereum is a 12.2, a strong buy, so a stronger than normal buy. And roughly the same as yesterday, so nothing too big. Bitcoin, completely neutral. Not taking a strong position either way. So the conclusions that I have from this, first of all, that overall, this market has lost its momentum. So a lot of what was driving the last couple of months was it's going up. And as it goes up, people see that it's going up and they get excited and they buy more, and people buying more makes it go up, and everyone gets happy and everyone sells less because it's going up. And it's like a rolling stone. That situation is no longer in play. So it's no longer a market where you can just throw a dart at a board and pick a winner, right? That was where we were 2 months ago. That's not what we are now. So 2 months ago, it didn't matter what you bought, everything went up. 1 month ago, the stupider and more risky the coin, the faster it was going to go up. Now it's not like that at all. Now it's kind of a coin picker market where some longs and some shorts is more appropriate than being either total bet long or total bet short. And in terms of FinRev, we can expect FinRev to go sideways until the market picks a direction. Yeah, let's look at the Sol chart. That's a really great idea. So let's compare and contrast with Sol. Sol is a 5.3. Now a 10 is a normal buy. So it's about a half of what you would expect a normal long position. And we can see if we break it down into our sub-algos, they're all about the same. They're all about a 5 out of 10. So if we look at it in a bit of a longer view, so you can see that we went long Sol here. We've stayed long, wiped a little bit off, stayed long, maxed out long. And then since about here, we've gradually been selling out our FinRev Solana position. And now we've got about half of it left. Really good question. Really good question. So, Antonio? More conclusions. So if we start another leg up and we start trending again up, FinRev is going to do really well. If the market shits the bed, which is actually what I'm kind of hoping for, FinRev is going to do really well and we'll get some really good dip buying in the 100x coin club. If we go sideways, FinRev is probably going to slow bleed. Let me just grab one of my FinRev accounts and I'll... So FinRev at the moment, you can see it's got this characteristic slow bleed when the market goes sideways, like we saw here. Now, this is typically a very, very good time to invest in trend following. You don't want to invest in trend following when I'm bragging about how much money I'm making. You want to wait until you're hitting about the average drawdown. Now, our drawdown from highs in FinRev is 10.56% this morning. It was down a little bit. It went up overnight. And that's about our long-term average. So our long-term average drawdown is about 10%. Investing in trend systems in drawdown is what I recommend for everyone. That is actually best practice. So if the market goes down here, which I'm kind of hoping for, my plan is to buy the dip in the strongest coins and to take some shorts. And let's just take a quick look at the shorts we've got running right now. So our shorts, we have BLZ, $40,000 position is $100 in profit. It's a nothing burger. We are long Ethereum, short Bitcoin, and between those, that's down about $50. No big deal. SEI, we are long. This position is giving me grief. FTT, massive winner, short from up here, still short, still like this, still going down. This is a great trade for us. And this is carrying our results. And JUP, we got short right here, still short, still looking good. Big profit there. Everything's looking good. GMX is starting to come good. So if the market starts going down, GMX is looking really good. And OX, I wouldn't recommend you guys getting in that. That's a very small position. I only have it open because I want to force myself to follow it. And one of the ways that you can force yourself to pay attention to a trade is to just buy $1,000 worth of it, and then you have to look at it. Miles, Joan, should we invest in FinRev or put money in now? I think right now is probably the optimal time for FinRev. I think it's picture perfect. So Miles, is it irresponsible to use FinRev money as a reserve for speculative plays? Not all the time, but Miles, it is irresponsible to use FinRev money right now for that. Why? Because this is a very high skilled market compared to what it was 2 months ago. 2 months ago, we could take reasonable high risk bets. Now we've got to start being a bit more conservative. So that's a really good question. So nothing moves in a straight line. It's been up only since October. We're either going to do one little burst up and then a more pronounced pullback, or we're going to pull back right here and then go. The bull market is still on. The flows are still in from the ETFs. We've got the halving coming up. Like there's no reason to be long-term bearish. In 6 months, we're going to be way, way, way higher than we are now. But we want to be a little bit careful here. I don't want you guys getting aggressive when it's a time to be a little bit conservative. And, you know, in 2017, the first pullback of any bull market is always the great one to buy. And that's what I'm hoping for. The same as in 2021, same as in every stock market bull for the last century. We have a very high probability buy setup. It's my task to see you have every dollar that's on offer from that. Now, what we want to do is identify the coins that we want to hold in 100x Coin Club, and we want to prepare stupidly low bids, which I call stink bids for the moment they come back down. We've talked about that. There's some stuff in it on YouTube. And which coins do we want to own? We want to do it a bit sciencey. We want to be the mathy end of these guys and less the sort of story end. So the scientific way is to bet on momentum. The coins that have gone up the fastest have a lead in the race. The smart bet is for the winners to continue to win. And why people love winning, the coins that people have made a lot of money on, people really like Solana, people really like INJ, people really like AVAX, people really like the things they've made money on. And that's a human nature thing. It's not changing. And so you can see that TIA, SOL, INJ, and AVAX are our big winners. They're the ones that we want to buy. Perry says, I hope the market crashes. I wouldn't say crash, but I'd really like the opportunity to buy some of my favorite things on discount at sale. And TIA is very strong. And let's just take a quick look at TIA. You can see that TIA hasn't had a wrecked chart at all. This looks like totally normal. If we break out above here, you know, TIA is probably going to go again. Miles, what is your take on this being an early bull run that will top near the halving due to institutional reduction of volatility? My take on it is that there's two types of predictions which are valid in the market. One type of prediction is that in the very long term, like over a full cycle, when people really, really love crypto, like they did in 2021, that's probably a top. And when people really, really hate crypto, like they did 6 months ago, that's probably a bottom. And in between, it's pretty difficult to pick things. Now, in terms of statistical things that predict future prices, we've got a bunch of them that work. None of them are predictive more than 12 days out. So anyone who tells you that this is going to happen in 6 months' time, and then this is going to happen, and then that's going to happen because of this, it's all a little bit of cope, actually, and mostly nonsense. Okay, so if we get a big dip, I want TIA, I want SOL, I want INJ, I want AVAX as the core of my 100x Coin Club portfolio, and then I want to do some smaller things trading around that. That's basically what I want to do. So we're going to examine these standout coins. But this is all in context of a larger wealth accumulation strategy. And the plan that I follow, that I recommend you follow, is to periodically transfer profits to FinRev. And that should do about 100% a year. The best time to invest in FinRev is always in a dip. Always. That's something that I've known for years from trading this way myself since 2014. Now, FinRev hasn't had a losing year ever, and it outperforms the traditional finance markets trend by 300% in Sharpe ratio terms. Our Sharpe ratio is 1.7 compared to 0.5 to 0.55 for traditional finance trends, and traditional finance trend does about 10 to 13% a year, and we're doing 100% a year. And those are returns better than, Warren Buffett and Ray Dalio and George Soros put together, kind of thing. So, and this is not because I'm super smart or our system is so much better than all the other hedge funds doing this. We've got more or less the same system. Like being honest, our system is pretty similar to the system in a Man AHL, and pretty similar. It's sophisticated and it's good. It's as good as I can make it, but we make more money than they do over in the regular world, just because crypto is newer, it's more uncertain. You need to have bigger balls to invest in crypto and blah, blah, blah. And you can see that this is the 2023 returns for the largest hedge funds in the world. And the best one did 59, but most of them, around 10, 12, 13, 15 is in the middle. Citadel, 15.3, Winton, 10, Millennium, 10, the Shore, 9.8. Like, those are the big guys. And us, we're at 100%. And that's just because crypto is riskier. Now, my plan is I'm going to keep pulling my winnings from the 100x Pulling Club into FinRev until it's 1 million. And I'm just going to leave it there and double it again and again and again and again until it's 10x, completely on autopilot. And when I say 10x returns on autopilot, you might think that's hype. But since 2019, what I'm going to show you today has turned a $10,000 starting investment into $203,000. And when we roll this out to customers on the 14th of April this year, you'd be forgiven for saying that I'm full of shit. I'm just a big talking marketing asshole on the internet, and there's no way we can get those kind of world-beating returns. And there's no way we could really double our money every year from crypto, at least not with spending hours a day on research or day trading like we're doing in 100x, and certainly not completely hands-off. And everyone knows that crypto is feast or famine. And this is the problem that we've set to solve with FinRev, is that, you make a lot of money, it shits the bed. You make a lot of money, it scares you. You make an incredible amount of money, and right when you're most optimistic about it, you lose half of it, and then it looks like it's going to be okay, and then it scares you again, and then it looks like you're going to be okay, and then it shits the bed and breaks your heart, and then does nothing for a full year, and now it finally works. And that's the problem with crypto, and that's the problem that we're trying to solve here with FinRev. We're trying to make stable and consistent income. So let's go to the videotape. So on 14th of April this year, after 10 months of us doing it for ourselves, we rolled it out to our best customers. Bitcoin was $40,119. And where is Bitcoin today? $41,606. So basically where we started. Went all the way down to 15,000, and then it rallied really hard. And today's price, 41,609, is almost exactly where we started. Yes, there is. Miles, I will message you. Miles, can you shoot me a quick email to scott@scottphillipstrading.com, and I'll help you out with that. So altcoins on average are still have done very, very well, but they're still lower than they were a year ago. But in that same time frame, FinRev, it's on track to double its money every year, still at a Sharpe ratio of 1.7 for the year. Everything's just like smooth and steady. And our drawdowns our average drawdown is this red dotted line. It's a bit under 10%. And we're at 10.3% right now. So it kind of takes the fun out of it on the upside, but also it takes the fear out of it on the downside. It's almost impossible to lose money. So what you're going to see today, and what no one else has figured out yet, is you don't have to worry about keeping your crypto money when the bull market ends. And, let's be honest, these bull markets always end, and they always end spectacularly. Like anyone who tells you that it's just like we're in a super cycle and it's going to be up only for 10 years and Bitcoin's going to be $1 million, it's like, bro, I would love for that to be true, but you're just making that shit up. Richard, you can do it with 2K, but I wouldn't recommend it. So what you're going to see today, what no one else has figured out yet, is that you can safely YOLO into some of these degenerate coin manipulation plays that we're doing in the 100x Coin Club, like this one we're in now, which is banging today. Win. It's called Anita Max Win. Basically because the ticker looks good. It's like a casino thing, which is retarded, right? Like it's absolutely stupid. But these things, like, you know, it's just banging really hard. And we've got this other stupid thing, Ninja, which has done nothing. It's a little bit lower than where we bought it from. It's probably got to go up right now, or we're going to exit. And our trial shorts, the shorts that we're betting against the market, they're a mixed bag. We've got 5 out of 7 winners, but it's all carried by the big wins in FTT and Jupe. And you can see that. You can see Jupe. Now, before we move on, let's take a quick look at those coins we're wanting to buy. And the thing I want you to see is that you see TIA here as being the standout, but there was clues early on. TIA started to break out early. Now, this is what happens almost every time. It happened in the 2021 ball as well. Anything that ended up being the thing that you wanted to own, it gave you a clue early. Like you can see INJ and Rune and Sol, they all gave you clues early. They started outperforming. Dieter, really good question. Scott, I missed taking profits shortly after ETF approval. Frustrated. I get that. Asking myself if I should wait now for lower prices or start loading up on my favorite coins. Here's what you should do. We should wait for the market to break this line or this line. If we break up here today, I think we're probably going to at least try and get up here. We might not get there, but we're at least going to go. If we break down below here, I would wait before loading up on your coins. If we go below here today, we're probably going to end up somewhere down here. So our play is to buy these coins, proven performers, and there's probably going to be a couple of other like surprise packet things that start making an early move. Our job and my job is really to identify what's making an early move likely to do another tier. We'd like to catch the tier of the next cycle. So how do we know when we're going to buy the dip? And this is important for you guys to understand. Conceptually, a dip has to shake weak hands out. That's the purpose of a dip, is to make people who weren't completely certain about this thing get out of their positions, and then those guys are going to be forced to buy back in at a higher price. Now, what I call this is the scare the hose stage. It, like the last stage of any dip that you want to buy, should be quite fast and quite scary, and it shouldn't be a gradual ease down to a dip. It should just be gradual and then fast at the end. When you see that fast at the end, that's usually the time to get it. Now, at the optimal time to buy, one way to know if you're doing it right is that you should not feel optimistic. If you look at a chart and you wake up in the morning and go, holy hell, it's my dip buying time. Damn, this is amazing. I'm so lucky to get in at this point. This is great. You're about to get fucked. Absolutely guaranteed. If you look at the chart and you go, oh man, I said I was going to buy it when it dropped 30% and now it's here 30%. I don't want to buy it. Like it looks like it's going to keep going. Oh, I don't know. I just don't know. Like that's what you want to feel. And this is really important to understand, is that what you want as a long investor is significant amounts of fear, significant amounts of uncertainty, significant amounts of doubt. Any time that you feel like something's a slam dunk, like, and I'll tell you the truth here, the reason why I sold out all our 100x Coin Club stuff is because everyone was way too confident about the future. Everyone was talking about it like it was a slam dunk, in the bag, locked in, to the moon. As soon as you hear talk like that, you want to be, whoa, 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 guys. Like, this is, yeah. Okay, so let's take a poll in the chat. So Scale of 1 to 10 is one is a disagree, no one wants to sell in this dip, and a 10 is this dip is probably going to scare most people. A scale of 1 to 10, throw in the chat what you guys are feeling, because that's probably the best gauge. Marlon, what do you think? Perry? 3, 10. 3, 10, 8, 5, 8, 6, 3, 8, 5, 7, 5, 4, 8, 6, 5. This is really interesting. 8, 6, 7, Dan. Any others? Perry, the question is the recent dip, this dip, how scary do you feel that this dip has been? Like on a scale of 1 to 10, do you feel like I know this one was probably a 10 for most people, right? So overall, about a 7, I think. Perry's not scary. You got giant balls, my man. So we've got a big range here. Okay, that's quite interesting. So the closer the scarier that dip is, the more likely that is to be the end of the pullback, and the more likely it is that it's going to start going up again. Okay, so yes or no, who feels that the recent part of the dip has been pretty scary? No. Mostly no's. Couple of yeses, not like 2022. Phil, I think you have it right. Inconvenient rather than scary. Now, let's take a poll. How optimistic do you feel that the altcoin rally continues? 1 is I'm not confident at all. 10 is I'm really confident that we just blast up from here. I mean, right now. So, Maya, you really are a 10 that we're going straight up from here. Gia, 5. Don, 6. Perry, 3. Robert, 10. Love to see it. I hope you're right. We have a very wide range of outcomes here. If you scroll back in the chat, we've got a couple of outliers that are like laser eyes guys. We got up only laser eyes guys. I would say most people are 50-50s. What do you think the average is there? Perry, what do you reckon? Yeah, I'd say the average is about 5. So the critical thing that I want you guys to understand is that as a long investor, you do not want certainty. You don't want everyone telling you that we're going up. That is absolutely what you don't want, because in my long trading career, every time I've been so confident that everything was up only, those were all the times that I got fucked. Every last one. And you can tell this is true a couple of different ways. We're going to go through some examples now, but the market was really certain heading into the ETF announcement, and look at what happened. You know, you want fear, you want uncertainty, you want doubt. And there's this old saying that markets climb a wall of worry. And we know this is true. It's true for stocks as well. Right now, there's a lot of fear around stocks and the economy and blah, blah, blah. And there always is, right? But stocks are at the highest price in human recorded history, despite all of the bullshit, despite all of the Ukraine war and the China shit and Biden and Trump and potential recessions and all the rest of it. Here we are at the highest price ever, heading to 5,000. And, you know, over the last 15 years, I could think of plenty of reasons to be bearish. Plenty of reasons. And we're still at all-time highs. Perry, it's really important to know that yeah, I mean, you're being sarcastic, but you've kind of got it right. This is one of those. Perry says, but Scott, we're not the average crypto investors. We're geniuses just for being here. The rest of the retail are muppets and degens, right? Well, I mean, obviously he's making a joke, but this is like the thing where if you ask 100 people, are you a better or worse than average driver? Most of them will say I'm better than average. And most people will say they're better than average traders. Most people think they're better informed than average. And really, we don't have a reason for believing that we're that good. And yeah, I think you're right. So our conclusions. This is a time when discretionary trading, like the 100x Coin Club, you're going to find it more difficult going. It's higher skill. You'll notice that we're doing less trades. We're being pickier about them, and the results have been a little bit patchier. Now, this is the optimal time to transfer funds to FinRev if you have a FinRev account. Why? FinRev is going to get it right, and it's going to minimize the bleed in the bad times. And investing in trend drawdowns is generally pretty smart. Now, these are our drawdowns. The maximum drawdown that you can reasonably expect is about 20%. If things went sideways for a long time, we might get to 20%, but we're at 10.3%, which is right around the average. So our downside here is minimized. This is a much smarter time to buy than when FinRev, to put money into FinRev. Generally, you don't want to do it. Generally, you don't want to put money into FinRev when it's at all-time highs. Now, FinRev continually adjusts position size, and 100x Coin Club uses fixed size. What I mean is that when we get into a 100x Coin Club pick, we're in until we're out. We're staying at a fixed size. Now, there's pros and cons to both approaches. When the sun's shiny and the weather's good, a fixed size, generally you can make more money. But our orange line is our continually adjusted position sizes on a traditional finance trend following system, and the blue line is fixed positioning, which is what we do in the 100x Coin Club. And you can see really clearly that in the good times, fixed positioning really outperforms. But in the bad time, fixed positioning really underperforms. Whereas adjusted positioning, what we do with FinRev, it's much more consistent. That's okay, Thomas. We'll send you a replay, man. Don't worry about it. So what I'm going to show you today is this sort of transcends any bad crypto market news that might disrupt the markets. And this is really the most powerful trading strategy ever created. There's a lot of evidence behind it, and it really does beat the market. It outperforms every other strategy, especially in crypto. The trend effects in crypto markets are everywhere. It's got a 100+ year track record of working in traditional finance, and it's worked every year in crypto since we've had crypto. It does its best work in the most chaotic times. It works in up and down markets. It requires no thinking and no luck and no predictions. So if you're if you're confused about, do we go up, do we go down, do we buy the news, are institutions getting in, will there be an Ethereum ETF, will there be a Sol ETF, what happens at the halving? If you're confused by all that stuff, like, it's much better to be a systematic trader. And this method has created countless billionaires and multimillionaires like John Henry. He owns Liverpool and the Boston Red Sox and some racing team. And these are my results. In traditional finance markets, I had a little bit of a drawdown at the end of the year. I was down 3% in October, 7% in December, 7% in November, another percent in December, but I still did 51% for the year, 89% the year before that, 32% the year before that, and 18% the year before that. So in traditional finance, it's pretty damn good, but it's nothing even close to crypto. And when we compare it compared to just owning Bitcoin, you can see we completely remove all these wild swings. You know, the things that we all hate about crypto, which is right when it looks the best, it breaks your heart, we've completely removed. And the good part is that it's all on autopilot. Like, you don't have to even check it. Now, I didn't discover any of this. We just reverse engineered it, to be honest. Like, we reverse engineered it from Men AHL, which is the biggest and most successful hedge fund in the space. And I'm going to tell you the story of how I did it and how it's going to make you twice as rich in the next 12 months. Before we get to that, this wasn't available to most people. Like, a lot of these funds require $1 million to talk to you. And some of them require, $5 or $10 million. Cliff Asness funds require $5 million minimum. If you want to do this on your own, like I did for years and years and years, you need about 500 grand minimum for a bunch of reasons. and I did it myself for years, and it's not that hard, but you can't take a day off. And if I traveled internationally, I'd have to arrange my flights so that they happened when the markets were closed. It was just a big ball ache in my life. It wasn't really, like, it was like, 30 minutes a day work, but I couldn't take a day off. And I got sent to hospital with kidney failure. You can see the tube sticking out of my throat. And here's me still there, waking up, recording myself doing the thing. Yeah, I'm really glad there's going to be a 100x call tomorrow, Mo. Yeah, I'm glad we didn't die. Everyone's glad I didn't die. And so I'm bringing this to you after stealing it from other people who built it. And what I have today for you is a fully automated press button make money system that can double your money this year. And with this system, your returns are going to demolish the best investors on earth. And the best hedge funds on earth do 12 to 15% a year. With that, you double your money every 5 to 6 years. The system I'm going to show you today does over 100% a year. You double your money every year. So you're getting richer 5 to 6 times faster than you can investing with the biggest hedge funds on the planet, which is why I'm opening the kimono. And today you're going to see the secret sauce behind what these guys are doing and how it all works, and with nothing held back, and all the intricate details about how it works and why it works and what makes it everything proof. Like if we got another FTX situation or the government banned crypto, which they can't really do anymore, we're still going to be fine. And this is why I'm betting the farm of it. I've got, way more than 70% of my net worth in this strategy now. It was 70% of my net worth, but it's gone up a lot. So now it's like 90% of my net worth. And the fully automated system I've created that can double your money this year in crypto, and you don't need any trading background or technical skills needed, even if you've never bought crypto before. Now, let's just go back in time for a second. You might think that I'm a crypto guy, but the reality is that crypto is just a means to an end for me. Like I'm a systems guy. I've designed trading systems. If we could make this work better on another asset, I'd be all over that. I'm in this to do my job as a provider for my family, help us live the life of our dreams. And I'm in this to hit my number and drop the mic and walk away. What I want to do is spend time with my family and, have the life I live now, but probably with a bit more freedom. I'm in this to do what I want, when I want, with whoever I want, for however long I want. I'm here to help you do the same. So I'll go over, we have the easiest path to making that happen. So let's go back to 2007. This was my first year of full-time trading, and I was up big. Like, I thought if trading felt easy, 2007, it was like crypto a couple of months ago. You throw a dart, you hit a winner. And I was up 900 grand since I started trading, and I was doing, technical analysis adjacent stuff. And I thought I was the shit. I thought I couldn't lose. And then 2008 happened, and I didn't see it coming at all. There was no clue. None of the people that I knew that were professional traders saw it coming. We all got wrecked. It absolutely wrecked me. And it was a big problem for me. If I was planning on making my living from this, but if I couldn't predict a 2008, and if I'm going to get back 90% of the money I made, well, investing is impossible. But I didn't give up. I went back to the best book on trading ever written. Is called Market Wizards. And one of the people in that book is a guy called Ed Seykota, who arguably has the greatest track record of all time in terms of percentage compounding. And, he started with a very small account. He turned $5,000 into $15 million in 12 years. And to me, that's what I wanted to do. Like, I wanted to take a small sum and turn this into a big sum. And this was the guy. So I tracked him down. And he's got this self-help trading group. He runs, like, it's a sort of a culty thing. It's called the Trading Tribe. And I joined it. I went every week for a couple of years. And Ed was a really weird guy. Like, he used to play his banjo all the time, and I'd stay up till midnight to jump on calls with him in the US. And he would never give specifics about his trading systems. Like, he was absolutely opposed to giving away the secret sauce. And he would sing these songs about trading while he's playing his banjo, and all these songs that, like, burned into my brain. It's like, what do we do? What do we do when we show a loss? We give that goddamn loss a toss. What do we do when we get a trend? We ride that sucker right to the end. And he always used to say one good trend pays for them all. And is actually backed up by the maths. And so I started looking into it, and I became really, really fascinated by trend following. I'm like completely obsessed with it. And one of the first things I found was this really interesting story about how this Nobel Prize winner called Eugene Fama, he came up with the efficient markets hypothesis. And he had a PhD student called Cliff Asness, who's now one of the richest guys in the world, who wrote his PhD paper saying that his teacher and his hero was wrong. And this was like a big deal in the finance world in 1993. And it turns out that Farmer was wrong, and you can beat the market. And Asmus was right. And Farmer even reversed his opinion, and he called trend following the premier anomaly in finance. And I started looking into it, and I found there's a bunch of hedge funds doing this. And in 40 years, none of them had ever gone broke. And plenty of hedge funds have gone broke, but no trend following hedge funds have gone broke. And the guys doing it, they were just crushing it, like Dun Composite, Dun Performance, sorry, Dun Capital. Over the life of their fund, you stick it in the stock market, you've got 170 grand, and you've got 1.2 million from them. They just have an extraordinary return. But with these huge returns, like the average drawdown is 36%. And they've done 17% a year with an average drawdown of 36%. But the system we've created returns 100% a year, which is a lot better. And the average drawdown is 8%. So your drawdowns are a quarter the size. Now, I have money with this firm, and same thing, like really big drawdowns, 33% drawdowns, average, they have quite a few 45% drawdowns. It's hard to live with drawdowns, right? Now, this is Winton Capital, which is a more modern trend following firm. And this is very, very similar to what we do in FinRev. Not quite identical, but pretty close. Now, the immediate thing that you can see is that it's much smoother than the other firms that I showed you, but the returns are only 12.5%, but the drawdowns are much better, but they're still 16% on average. And we're beating the pants off these guys, and we're giving back less money in the bad times. So we're not just making more money than they've ever been able to in a single year. We're keeping away more of it as well. And so after, I got into it, and in 2014, I was ready to do it myself. And my first year, I turned 600 into 900 inside of a year. And I was hooked. It's like, this was the first thing that I've done that's systematic, that actually worked. And it's made me quite a lot of money, but it was a lot of work. It wasn't super sustainable. And the biggest problem I've found that it is for most people is you have to have a lot of money up front. And you don't have that problem in crypto. You can run a full trend following program with as little as $2,000. So let's fast forward. And 2014, this isn't my buddy's yacht, but I had this buddy in Thailand. He was kind of a stoner, prostitution enthusiast, loser, like a real, like anyone would say he's a loser. And he's got this amazing boat and a beautiful, beautiful beachfront mansion in Thailand, and he's living the life, and just stoner guy. And it turned out that he had a lot of crypto, and this is how he got minted. And I had this other buddy who was also friends with him, and he was an English teacher, which is like a job that pays a couple of $1,000 a month here in Thailand. And he bought himself an Audi sports car, and he bought a beautiful, beautiful beach house on a beautiful island here, and living this incredible life. And it turns out they're all with crypto. And at the time, I thought crypto was a joke. I was like, I'm a professional. I'm not interested in these joke markets. But to shut these guys up, I bought some Bitcoins, and then Bitcoin went crazy, and then tripled my money in 2017. And then the bear market came, and I lost it all. I lost all the money that I'd made. And that's what most people think of when they think about crypto. They think making a lot of money really quick sometimes, and then giving most of it back. And that's the way it's been for most people. And I found a way to change this. And our first shot at this was a system I created called the Automated Wealth Creation Engine. With very minimal effort, it was on Monday, we used to buy the 5 strongest coins. That's all we did. Every Monday, wake up, 7 a.m, buy the 5 strongest coins. It worked really well. It worked much better than I could have imagined. I made 700K in just under a year from it. Didn't keep all of it. I kept about 63% of it. A bunch of other people made a lot of money from it. And the big innovation I've discovered, and what I think is the greatest discovery in little guy finance, is that when you apply the really well-proven strategy of trend following to crypto, it does better than hedge funds do in traditional markets, not just by a little, it works like 6 times better. And this is what makes it possible to double your money this year. But what I didn't expect is that it removes all these crazy swings from crypto. And that's the real problem with crypto, is make a lot of money and then lose it, and make a lot of money and then lose it. By getting rid of that, we're able to be profitable every single year, no matter what the broader crypto market's doing. And Crypto is a very, very risky market to invest in. I want to be upfront that the 100x Coin Club stuff that we do, that's gambling adjacent, right? But FinRev is. So what I'm talking about today isn't really about crypto. Like I mentioned before, I'm a systems guy. If there was a market that the system that I've created would perform better in than crypto, I'd be there. So it's really about the time-tested, battle-proven, proven to work in the real world strategy of trend following, how it works better in crypto. And trend is the foundation of the whole thing. It's just universally the best way to trade any market, but it works better in crypto. Why? Because crypto moves faster and with more force than any other market in history. I'm not a crypto fanboy. I kind of am now, but I wasn't when I started. It just moves faster. And that's why the first system worked so well, but it wasn't perfect. It made lots of money in the bull market, but it just switched itself off in the bear market. It was really unsatisfying and boring. And the perfect system for me has to work in bull markets, bear markets, ostrich markets, any type of market. It has to work well if exchanges collapse, if we get another FTX, scam coins, moon coins. The next system has to work no matter what. It has to be really anti-fragile and robust. It has to have big returns with the big swings. And, where I figured it all out from was this podcast called Top Traders Unplugged. And it's an industry podcast for people who work in the trend following industry. And there was these two guys arguing on it, who work for two of the biggest funds. And they're really angry at each other. And they're talking about like the specifics of how their systems work. And I thought all this stuff was secret. And it turns out that none of this is secret. Like none of it at all is secret. Like everything in FinRev is just common knowledge within that industry. And what I did, I took some notes and then I went to LinkedIn and then I looked up every single person who worked at all of those funds and looked at what they'd done at university and what they published their PhD papers on, and then read all the Journal of Finance articles that they were mentioned in. And there's nothing secret here. Like it was just all on the internet waiting for someone hard-headed enough to put the pieces together. And so I'd already figured out how to make trend work on the way up. The automated wealth creation engine really worked for that. But now we have the secret sauce on how to make it work all the time, even in bear markets. And I thought to myself, how hard could it be to figure out? And it turns out it was pretty damn hard, but it was worth it. And it's really been the most fun I've ever had. This last couple of years has been extraordinary for me. To do something better than anyone else in the world has been so satisfying. And I hired, the best engineer I could find was a true top 1,000 in the world programmer, much smarter than me. I'm not anywhere close to the smartest guy in the company anymore. And we got obsessed and we set about proving all this stuff out. And we recruited a really great team of programmers, and 10 months before we gave it to customers, we turned it loose on crypto. We didn't even do a back test first. That's how confident we were. And now it's going to make you rich. Which brings me to why we're all here today, because this is the accomplishment of my life. Because it's 100% fully automated, set and forget it. This system is quite literally my life's work. I'm beyond proud of it. I'm so grateful I get to be sharing it with you. It's short for financial revolution because that's what it is. And the whole idea is that the little guy can finally get a leg up here. And just because crypto is the way it is, it's structurally a great opportunity for the little guy to make life-changing money. And I shit you not, I can hand on heart say you take a few minutes, press a couple of buttons, set this thing up, and you can double your money this year without doing any work or paying any attention to it at all. So let's talk results. When you compare it to Bitcoin, in the good times, Bitcoin will outperform it. But overall, we're 5 times as good as Bitcoin since 2019. Never had a losing year. Bitcoin has plenty of losing years. Results since 2019 at 97% compounding, Sharpe ratio of 1.73. Our Sharpe ratio this year was 1.7. So basically, we're bang on averages. This is client results since the April launch. You can see 100% Sharpe of 1.7. Dream results. And the bottom line is this performs far better than literally anything else, but it isn't about getting rich this year. It's about long-term life-changing wealth creation. Now, we got a big opportunity here. And the big opportunity is that crypto markets are newer and therefore less efficient than stock markets. People are less certain of the outcomes. That inefficiency is why FinRev works so well. It's not me. It's not that I'm so smart or I'm so amazing or I've got special insight that other people don't have. That's all bullshit. Crypto works better because it's more inefficient. Why is it more inefficient? Well, lots of reasons. You know, the liquidity is fragmented between all the different exchanges. Institutions are having trouble getting positioned. All that keys and coins and, you know, all the rigmarole with it, it makes it harder. This is where our profit comes from. And I think that we're good for about another 10 years of this. So compound interest is the play. If you get 100% compounding, it sounds crazy, but 10,000 bucks is going to be 320,000 in 5 years and 10 million bucks in 10 years. And even if you only do half that, it's still a 33x return. Even if you did a third of that, it's still a 13x return. It's a long-term play. Now, our strategy has done 100% on average per year. It sounds crazy, but you can turn 10 grand into 14 million. I mean, it just sounds ludicrous. Like, who could believe that? And my goal for you is the ability to do whatever you want, wherever you want, with whoever you want, for as long as you want. And most people use their time to buy money. I want you to use your money to buy time and just buy freedom with it. And for that, compounding does the real work. And so this is the play. Take whatever you earn in the 100x Coin Club, flick it into FinRev, leave it alone, let it start doubling for you. And then before too long, you're going to be in a position where you have true freedom. Now, trading systems don't get any better than this. They get different. And we can talk a little bit about that. But if you push a few buttons, you leave it alone, you never look at it again, there's a great chance it's going to double your money this year, next year, the year after that. Now, let me show you how easy it is to set up and use. It takes zero technical skills, zero trading background. If you can open a web browser and load up Netflix, you can use this. I'm going to show you every step right now. So you log in with two-factor authentication. You choose your exchange. The exchanges are Binance, Bybit, KuCoin, BitGet, and DYDX. The options for US customers are BitGet and DYDX. I have a strong preference for DYDX. I think it's been really great performing exchange, and it has some other advantages as well. So this is the way it works. You get a dashboard, and your dashboard shows you an equity curve, shows you how much money you've made, shows you how much money you've got, how much money you put in, shows you what it's currently worth. Pretty simple. If we go to the portfolio tab, you've got 100% full transparency. You can click on any position and it brings up a chart, and you can see at a glance whether it's short or long. You load up a chart and it brings up these forecasts, which are how we size our positions. And you can see historically the position size by date, like what was in, how it changed day to day. It's very easy to work out what's going on. And you can click on the trade history tab and see exactly what it did every single day. Now, I'm going to get a little bit nerdy here. What we're doing, we are measuring trend strength in 36 different ways. And it's 6 different ways, and each way has 6 different time periods that it's measuring it over. And we're going to blend those into this solid blue line here, which is our trend forecast. If that forecast is positive, like it is here, we're going to bet that the market goes up. If the forecast is negative, like it is here below this line, we're going to bet that the market goes down. If the market starts going down and then changes its mind, we very smoothly, like you can see here, we bet that the market went up, it started going down, we bet that it went down, went, oh no, we're wrong, and flipped. Now, what this does, it makes the system really robust and anti-fragile. So you can't really get fooled. Like if the market starts going down, we'll be short. If the market starts going up, we'll be long. So you don't have this kind of indecision that we have with our manual trading. Now, let me show you some cool stuff. So what we're doing here is this does not work the same on every coin. For example, Bitcoin works much better than other coins for a bunch of reasons I won't get into that are too nerdy. So Bitcoin has a much higher portfolio weight. Today, Bitcoin has 3% of the portfolio. Whereas if we picked some tiny shitcoin, it's down at 1/10%. So what we're doing is we're allocating more money to the coins that work better for trend following. Now, within our individual systems, you can see, for example, here's our allocation. Breakouts perform better for this coin, so it gets more money. This one performs not nearly as good. These are moving average crossovers, and the rest of these aren't performing very well, so they get hardly any money. And so as that changes and this one starts to work better and this one starts to work worse, we change that over time. So if we looked at Ethereum, you can see that these weights are constantly changing. We're allocating more money to signals and coins that work better. Now, what this does is, this is it if we just allocated equal weight to everything. This is before cost, this is after cost. You can see that the drawdowns are reasonably significant. But when we do this, what it does is it just turns things into a sideways period before they go again. That's basically what it does. So it lowers drawdowns. And, you know, obviously we do this to individual coins as well. Now, all of our exchanges are working well so far. There's no clear winner. Like sometimes one is outperforming, sometimes the other is. Right now, Binance is just in front. That wasn't true 3 months ago. I really like DYDX so far. Now, the next improvement that we have is a game changer, because we're adding an additional system to trend following, and it works the opposite way of trend following. So trend following goes sideways most of the time, and it makes a lot of money when the market moves. Goes sideways most of the time, makes a lot of money when the market moves. This one makes money most of the time, but shits the bed occasionally. Makes money, shits the bed occasionally, makes money most of the time. Shits the bed occasionally, makes money most of the time. Shits the bed occasionally. Now, this tends to work statistically in the opposite way of trend following. So what we do is, instead of going sideways up, we're making a more steady march up and to the right. So it makes it more consistent. This makes it much easier to live with and improves the risk-adjusted returns. And it solves really the primary thing about trend following that people find difficult to live with, is that you'll have like a 2-month period where it doesn't lose any money and it doesn't make any money. It just sits there doing nothing. And that's something that people find hard to live with if they haven't done it before. This solves that problem. So if you're a little lost and confused, good. I wouldn't expect you to get it right. It's just important for you to know that this is all happening in the background. You don't need to understand every detail. That's why it's automated. You don't have to think about it. I barely think about it, to be honest. You know, I check it. I'm checking 100x Coin Club stuff like 5 times a day. I check this like once a week. But I want you to be as educated as you can about how it works, whether you want it to be a black box or you want to know every source of detail. If you're still here and this is interesting to you, let me talk to you about how you can put it to work for yourself, how to get on your own way to doubling your money this year too. It's an iconic combination, like the FinRev and the 100x Coin Club together. FinRev can't match 100x Coin Club in the good times. Nothing can. But FinRev keeps it all. I personally wouldn't have one without the other. So here's the incredible deal I've got for you. You can have 3 years of fully automated trading. Actually, that's the old pricing. You've got 3 years of fully automated trend following for $6,500, which is $2,150 a year, which is $130 a month, I think. And that's at a standard volatility, 40% volatility target, like all the data I've shown you today, with a single exchange. You can choose. You can get 3 years of trend following plus cross-sectional carry, which I've just shown you, which smooths the returns. You can get multiple exchange redundancy, so you can split your risk between exchanges, and you can have the ability to run multiple vol targets. So you can have an aggressive account and you can have a conservative account. If you want to do it that way, which is more complex, that's $9,500. Now, what happens after the 3 years are up? I'm not going to charge you again. I'm going to charge you 20% of the profits we make and 2% of the account balance every year, like any other hedge fund. I'll get to questions in a minute, guys. Part 2 of the incredible deal, Once those 3 years are up, you can keep this forever. You don't have to pay me any more money. I'll send you a bill for 20% of the profits we make together. Our goal is to be the world's first fully distributed hedge fund on the blockchain. We're running $4.52 million of client money right now. I'd like to turn this into $100 million, and I'm going to, I'm just a street guy. I'm not a finance professional. I'm going to build $100 million hedge fund from scratch with little guys like you, and we're going to be the world's first fully distributed hedge fund. We're going to put it on the blockchain. We spend millions and millions on this, but we're ready to bet the company that you make money. If you don't make money, I shouldn't make money either. So it's 6,500. That's 3 years of automated algorithmic trading. You get a VIP onboarding with one of our crypto trader coaches, not like a customer service support rep from the Philippines. You're getting like a real actual trader who's got money themselves in FinRev. You get all the stats and monitoring that I showed you. You get cross-sectional carry. You get a 40% volatility target. You can delay starting or pause at any time. If you decide, hey, the opportunity is greater in 100x Coin Club right now, like it is sometimes, you can pull some money out, shove it in there. You can pause. You can do it however you want, and we're flexible like that. We've got a double your money guarantee. So the guarantee is if you aren't in profit after your first 12 months using the system, we'll let you use it for free until you've doubled your money. Now, all clients have been profitable with this system. So every client's profitable. Now, how you get access, you go to finrev.trade/call. If you happen to need a payment plan, if you're moving money around, if you need if you want a longer commitment or a shorter commitment, you just want to try it for a year or whatever, just book in, discuss your situation with the enrollment stuff. We'll take care of you. Now, I'm going to answer some questions here. Okay, Rick Smith, do you think the US-based exchanges will be able to allow US customers to trade crypto on them soon, since the Bitcoin ETF has been approved? I think yes for spot. I don't think in the next year we're going to see fully legalized perpetual futures trading, just because they're competing with the Chicago Mercantile Exchange, and there'll be some political stuff about letting other people hone in on their racket, so to speak. I think we're probably still going to be using DYDX, GMX, Hyperliquid, and a couple of exchanges that are doing a don't ask, don't tell policy. Okay, Sean, I just joined the 100x program. Sure, Sean, if you just shoot me an email, scott@scottphillipstrading.com, I'll sort you out, man. Miles, how small cap are the coins that FinRev considers? Okay, this is very interesting. Trend following, and we didn't know this when we started because all the data is on traditional finance. We didn't know that trend following works unequivocally better on the big coins than the small coins. And in fact, if you get to the really small coins, there's negative trend effects, there's pump and dump effects. What about new projects like memes and NFT projects like Karate Combat? I've got a bunch of data. I might post it in the 100x Coin Club, but it's not particularly promising for trend following on average of these new coins and the NFT projects. So trend following actually works better on Bitcoin, Ethereum, Solana, Litecoin, Link, things like that, compared to Inu, Ninja, things like that. Your next question, does FinRev ever consider compounding via staking? No, but it's something that we're looking at. I'm worried about the counterparty risk there, but I would like to add staking to it. Perry, the reason it doesn't, Perry says it's impressive that it doesn't overtrade too much and lose to fees and bid-ask spreads. The reason it doesn't overtrade, let's say you've got $1 million in FinRev. You've got $1 million in FinRev, you've split up between 100 positions. That's probably an average of 10 grand per position. And now every day you're going to move that position up a little or down a little, probably by 2% to 10%. So even if you have $1 million account, on every individual coin, you're probably only buying $1,000, selling $2,000. This is a $87,000 account I've just got up for demonstration purposes. And you can see that it's selling like 0.0, it's selling like 0.004 of a Bitcoin. It's selling 900 XRP, which are like a couple of cents each, you know, $50 worth of Ethereum Classic. So you've got a $100,000 account. You're selling $50 of this, $100 of that. You know, you're not really going to overtrade that. Thomas, it is 8:13 a.m. in Thailand. And Sean, my email address is scott@scottphillipstrading.com. So I think that's everything, guys. Is there any more questions? I'm happy to answer anything really technical about FinRev. Happy to answer. Happy to answer any questions about 100x Coin Club. Like I'm here for you guys. Like, Perry, Sol is only 2 times to its all-time highs. You're expecting it to go way higher than the all-time highs? Yes. Why are we expecting that? Well, is the crypto market in a better spot than it was 3 years ago? Is it more mature? Is it more developed? Is there more institutional support? Is it more mainstream? I think that's a reasonable bet. Is it reasonable to say that any popular, well-developed, technically sophisticated project is worth more now than it was in 2020, 2021? I think that's reasonable. I think many coins won't make their all-time highs, but I think the coins that do make their all-time highs are going to be bangers. Perry, you've also struck across an interesting phenomenon, which is because when coins are newer, they don't have as many bag holders. So what happens if you say bought Sol at $100 and it goes down to $8 and it gets back to $100? You might sell out. There's a lot of that selling pressure from people who are stuck from the last cycle. And what we see is that coins who don't have that, you know, that baggage of bag holders or people who are stuck in there, look at the 2 coins in particular that weren't around last cycle, TIA and INJ. And look at how easy it is for both TIA and INJ to outperform the others, because something new without any of the baggage is much easier. And there's human biases that support that as well. Like if you go to Foot Locker today to buy a new pair of sneakers, you're probably looking first at the new releases. If you go to a bookshop, you're probably looking first at the new releases. If you go to watch a movie today in the cinema, you're probably looking at the new releases. You're probably not looking at the ones that have been there for a couple of months. This is a human bias. We overweight new things over old classics. Like if you look at books, like old books are much better than the books that come out today, but I'm still looking for the new books. Same with old movies. Glev, FinRev tells us what to buy and sell, and we do it on our own. No, it's managing your funds completely automated. You don't touch the buy and sell buttons at all. Okay, so really good question. How do we get funds into the FinRev system? You deposit money to your crypto trading exchange, and the next day at 0000 Greenwich Mean Time, it says, okay, Lev has deposited $10,000 into our account, and we start trading with it. And so it all the money stays in your account and it trades within your account. It can never withdraw money out. And then if you want to withdraw money out, you don't have to ask my permission or anyone's permission. You just withdraw $10,000 or withdraw. If you have $10,000 in, you withdraw $5,000. The system just adjusts and says, oh, he withdrew 5. We've got 5 left. Let's trade with 5. Miles, the tier airdrops are really driving some crazy interest in it. It's amazing. Catnip for newbies. I think that's it. So guys, I would really, really encourage you to get involved with FinRev. Speak to one of our onboarding people at finrev.trade/call. It's the best thing I've ever done, and it's much easier and much lower work, more certainty of outcome, not as exciting, not nearly as fun. It sucks all the fun out of it, to be honest. But it's what you should do. So I'm going to leave it there. Thank you so much for your time today. Really appreciate it, guys. Be well.